Good evening, everyone. Steve here from theturtlefollower.com with a intra-week stock market outlook video. We're here. It's Wednesday night, October 7th, 2015. I just want to put a video out, kind of go over my thoughts for the next 2 days. I think we've seen a nice little run off the bottom. Again, we talked about this yesterday or Saturday about the nice short trade that we caught in the SPX on the move below this low right here. And we also talked about the little swing trade that we caught to the long side on the move above this candle here. So now kind of looking at everything with a fresh set of eyes. You can see I took a lot of the indicators off, and we're just going to look now at price levels. Okay, so first thing I want to point out is we closed over the 1992 level, all right, that we had topped out at a couple times before. If you want to get real technical and zoom in, you'll notice that the high from the 16th was actually 1997, so we actually hit that today and pulled back a bit. That's the first thing. All right, so just keep in mind that, you know, we can potentially break out, absolutely, not an issue, but think of where we've come from. All right, where we are now, it could very well be one of these V-shaped reversals that never lets you in. Obviously, I would like to see maybe a little bit more time spent right here below that 1997. Maybe we flag out for the next week or so and just go sideways. That would be ideal, all right, because that would give everybody a chance to actually get in, and it wouldn't be so much of a, like, let's chase this rally, and then ultimately it fails. You can see we have plenty of room to this downtrend line in the SPX. All right, so that tops out somewhere around this 2050 area. All right, that would be where I would say that we would probably see some more resistance. But with that said, I also think that we may be in for a little bit of a pause. All right, so while I do think longer term we potentially break out of this, use this as a W bottom, maybe break out, test this trend line, maybe even break the trend line and get back up to all-time highs. I think that's very possible, but there's a couple things that very short term that I think you need to be aware of before we get to that point. All right, the first is if we go back to my intraday chart of the market. So this is the SPX. We're looking at a 6-month on the top left, a 20-day 1-hour chart bottom left, and a 2-day 15-minute chart. There's a couple things I want to point out to you. Number one, all right, and this is why I think maybe we're in for a bit of a pause, if not maybe a little bit of a pullback, which is exactly what I want. But, you know, just because I want that doesn't mean that's what's going to happen. All right, so number one, here is the 50-day moving average. All right, you can see that not only did we top out right at that old high of 1997, but we also hit the 50-day moving average and closed right below it. All right, so I would say at this point, the first test of the 50-day moving average most likely gets sold. All right, it did today. All right, you can see that here on the hourly. First test got sold, came up, got sold off again, came up again. Now, does it break? Does it not? You know, we'll see what happens. But that's the first thing. Second thing is we've talked about linear regression channels. I've talked about them in the past. I use them sometimes. I don't use them sometimes. You know, for me, it's a little bit of a difficult situation because, you know, as a trend follower, I like to think things can run farther and faster than you originally anticipate. As a contrarian trader, I like to think that things revert to a mean. All right, so for me, it's a little bit of a back and forth type of indicator. But the one thing that I will point out is if you look here on the hourly chart, this is the upper trend line of that regression channel. All right, and you can see we came up here earlier in the week, or in the month I should say. This was the high from the 17th. All right, and look at what happened. Okay, we came right into that downtrend line and we sold off. All right, now we're spending a little bit more time here, but still this wants to, if you're trading from a regression standpoint, this wants to roll over and break down below today's low, yesterday's low, which is somewhere around 1970. All right, so that's what this is indicating that maybe we come in back to this level. Second thing, All right, look at where we are from this trend line. Look at how extended we are from that trend line. All right, that's the third thing. So three reasons right there that I think we potentially could head lower tomorrow. Last but not least is the stochastics. All right, again, I don't go over this with you guys that often. This is really for me when I intraday trade, which I do sometimes now and again, mostly the SPY, but it's just another way for me to generate some income besides the trades that I have on. But with that said, stochastics, you can see every time the stochastics kind of top out over this overbought level, okay, here was 3 times just in the last 2 days, we get a little bit of a pullback. This one not so much. This one ultimately big pullback. All right, this is one that I was actually able to catch short and made a nice little profit. You can see here again, stochastics oversold, a little bit of a pullback, and now here we are again over that level, indicating that maybe we're going to pull back. So I think going forward, the one thing that I would just caution you for is, you know, we may very well pop over this level tomorrow of 1998. But remember, the close is what matters, okay? So if we pop above it, close back below it, all right, most likely that's going to be because we're hitting the regression channel. We're trading outside of the regression channel, which doesn't normally happen. You can see here, we traded outside of it, and then it catapulted us higher. Trade outside of it, I think it brings us back below the 50-day moving average, maybe puts in another gravestone doji, indicates a reversal. All right, but again, I'm not looking for a reversal back to the lows. I'm just looking for some of this overbought to kind of work itself out. All right, and the last thing, all right, so I think that's 4 things. The last thing is if we put on the McClellan Oscillator, which determines overbought and oversold, and look at it on a daily perspective, you could see that we are extremely overbought. All right, anything that's over this level, overbought. The last couple times we were over there was here on the 17th. Sure enough, we got a reversal. Here again on the 16th. Sure enough, a few days later, we got a reversal. All right, but not to say that this is a 100% accurate indicator, because look at back here in 2014. All right, we were overbought for some time, and the market just continued to run and run and run and run. So that's very possible that this is what happens this time. All right, maybe we're in this state where we just continue to run and run and run. All right, but again, I think that going forward, looking at all of these and kind of formulating where I think the market goes, I think ultimately we head a little bit lower in the next couple days, and then we'll revisit it over the weekend. But I don't want you guys to think that you're missing out. So, you know, not necessarily that you have to chase things, just be aware of where we are in this overall trend, be aware of where we are with all these oscillators, and, you know, at the end of the day, they could mean nothing. All right, the market's going to do what the market's going to do, but, you know, we're starting to stack some things up against the bulls here a little bit, so I just want you guys to be aware of it. Hopefully that helps you in your trading, and we'll see you over the weekend. Take care.